Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Rising trade tensions weigh on investor sentiment across Asia as equities open lower. JSW Group Chairman Sajjan Jindal says he's willing to join forces with the Ruias in their bid to retain Essar Steel and in order to keep ArcelorMittal out of India. Quality is more important than the number when it comes to fiscal deficit, according to former RBI Governor Raghuram Rajan. That's another exclusive from Davos. And robust performance in the FMCG and hotels business is likely to aid ITC's third quarter performance. Analysts expect cigarette volumes to grow between 4 and 7%. And better pricing in a seasonally strong quarter may be only saving grace for Interglobe Aviation in the December quarter. We'll tell you why. Now, let's talk about the US markets. US markets they snapped a 4-day gaining streak over rising pessimism that trade tensions are here to stay. Oil prices, in fact, also fell the most in a month, while treasuries were stable. Taylor Riggs of Bloomberg News tells you what happened when Wall Street came back into action on Tuesday.
I'm Taylor Riggs with a look at your U.S. markets on Tuesday. U.S. markets really ended on a very broad-based sell-off. You had red across the screen, every major sector lower as well. The Dow Jones ended off about 300 points or lower by 1.2%. The S&P 500 lower by 37% or about 1.4%. And tech was the worst performer as well. It was off about 130 points on the NASDAQ or about 2%. So really, tech was driven lower by a lot of concerns coming out of slowing global growth. The SOX, or the Semiconductor Index, which has broad exposure to China, for example, was off the most. That was down about 3%. So really, global growth concerns and fears over U.S. and China really weighing on risk appetite today. And as we take a look at all of the sectors, a lot of that theme really folds through because, as I mentioned, it was a broad-based sell-off, every sector in the red. And the worst performer by far was the industrials. There's a lot of concerns about slowing U.S. and global growth. And so industrials, or some of the more rate-sensitive sectors, really were weighing down today. Two stocks in particular within that sector really dragged everyone else down. The first I'll mention was Arconic. It closed lower by about 15%. It was the worst performer. This is after it stopped a bid or refused to sell itself to Apollo Global Management. So investors really concerned about not being able to sell the entire company and instead doing sort of these one-off asset sales. And so that stock closed lower by about 15%. Investors as well a little bit concerned over Stanley Black & Decker. That was the second worst performer of all the industrials that we were looking at. And they really highlighted concerns about slowing global growth. On the analyst call, they lowered sales guidance for the upcoming year. Some of their biggest customers are companies like Lowe's and Home Depot, and so they said that they're really seeing signs of a slowdown, and that was weighing on the shares as well. Those were off again about 15%. Finally, this broad-based sell-off that we've talked about has sort of hit some of the other safe haven assets as well. You had bids on treasuries falling. The 2-year and the 30-year yields are down about 4 basis points. On the 2-year now, you're at around a 2.57. The 30-year down to about a 3.06%. Remember, on the 30-year, that 3% is a key gauge here for investors. And the 10-year down about 5 basis points to 2.74. And then, of course, with all the risk assets sort of selling off, you did see the VIX spike up a little bit. You now have the VIX above a 20 level. That is its highest going back in a month. And that is a look at your U.S. markets on Tuesday. I'm Taylor Riggs.
All right, now let's talk about another big update from the global stage. Former Chancellor of the UK Exchequer, George Osborne, believes that the UK is staring at the possibility of a no Brexit or a no-deal Brexit. Speaking to Bloomberg Television at Davos, Osborne says that a conciliatory approach to Brexit is now looking bleak. Listen in.
And we would hit a point where the promise that you can leave the EU and have all the benefits of EU membership would run out of road. I guess I hoped that there would be a more conciliatory approach, that we'd find a middle way through, like a sort of Norway model for Britain, outside the EU, but still very closely aligned with the EU. That feels to me like it's gone, and we're confronting increasingly the two choices, which is leave the EU without a deal at the end of March, or delay or stop Brexit. That's emerging now as the two big choices the country faces.
The former Prime Minister David Cameron did kind of make the process sound quite straightforward. If the outcome of the vote was that the United Kingdom voted to leave, he would go across to Brussels and trigger Article 50. As we found out, both of you eventually ended up leaving the government. Do you think both of you still have a certain amount of responsibility to the outcome of what has happened in the UK, since it was your government that did bring the vote to the British people?
Well, I would say, first of all, David Cameron, and indeed myself and others, did spell out to the country that there would be very serious consequences of leaving the EU, not just for the economy, but for our security relationships and indeed the Western alliance. And I would argue that the process in some ways has been quite straightforward. We've triggered Article 50, there's been a negotiation, it's all been done in a kind of orderly way. The problem isn't the process, it's the policy. What do people want our relationship with the European Union to be? Do we want no relationship at all, or do we want a very close relationship? And that remains as contested as possible. So, that's the hard politics. That's not about the procedure or the process or whether we have the right civil servants or the right negotiating team. It's about fundamental contradictions in what Brexit promised.
Now, just pointing out, we're going to take a look at the Asian markets. Just for context, remember that the US markets, the three averages there, closed between 1.2 and just about 2% lower overnight. There's a broad-based pressure in equities that was suggested, but that isn't falling through with regard to the Asian markets that have opened up so far. Now, the Nikkei in Japan is down about 0.2%. You have the benchmarks in China that have opened up, but they're just about flat to marginally positive at this point. You also have the Hang Seng that's flat to marginally negative. So all of those major markets seemingly searching for direction in the early hours of trade. Remember, there are several updates that have come in. Most important, though, is this focus on global growth and the comments about uncertainty with regard to the trade conversation between the US and China. But for now, let's switch to other news. And in fact, there's a lot of updates coming in from Davos. The World Economic Forum, remember, is happening there. Raghuram Rajan, who was speaking on the sidelines of the event, says that it's the present government, should aim to steer away from announcing big welfare schemes in the vote on accounts. Speaking to Menaka Doshi, the former RBI governor, says the task on hand for the new government would be to create more jobs.
I think a beneficial legacy of this government would be for that last budget to be a responsible one, to be one which doesn't saddle the next government with significant legacy, because already, some, as is typical, some expenditures are postponed, are off balance sheet and so on. But if this becomes more than the normal, then the next government has to deal with it, maybe the same government again, but it creates problems for the future. So I would say broadly responsible budget, because after all, there's not that much spending even that you can do in the short run that will create political support. So really maybe outline a path for further reforms if necessary in the budget, but allow the next government, again, with the possibility it may be the current government, to figure out how to take it forward. In terms of the agenda for the next government, almost surely way up on the agenda has to be, how do we create more jobs? As you said, very strong growth, 7.5% growth, but it doesn't feel like the jobs are being created to take people out of agriculture. We haven't seen the kind of departures from agriculture that typically happen with China at this level of development. So how do we do that? How do we improve the quality of livelihoods in agriculture and in rural areas, but also allow the transition to semi-rural industry, create more jobs there? How do we create more semi-skilled jobs which are reasonable and offer good livelihoods and allow the possibility of transitioning to better jobs? So these, I think, would be front and center for any new government. And part of that process is, how do you get more growth in areas like infrastructure, which can create the possibility for unskilled jobs, but also create more jobs in manufacturing and in value-added services.
We've been talking about that for a long time. But before I get to that second part of your answer, in the first part, it seems almost taken for granted now that we'd be at about 3.5% for the centre's fiscal deficit. Do you think that's an acceptable level, given that directionally this government's been fairly disciplined in wanting to bring the fiscal deficit down? Do you think it might even exceed that? In the last few days, we've heard the government speak of the need to address the agrarian crisis through certain short-term fixes, and we're not sure what that solution will be, but it might be a bundling of the subsidies and replacing that with some sort of cash benefit. How do you react to some of these conversations?
Well, I think that at some level we get fixated with numbers. The numbers are not as important as the quality behind the numbers. You can reach 3.2, whatever you want as your target, but if what you've done is put a lot of stuff off balance sheet, it becomes problematic. This is something the CAG has pointed to in past budgets. And again, I want to emphasize the normal level of postponement of off-balance sheet is okay. But if it becomes extraordinary, then effectively you haven't reached anywhere near your target. So I think a lot depends on how the quality is perceived. And really, for India as a country, we must recognize the fact that today our fiscal deficit, when you combine the state and the center, is much higher than that other large countries have. And there is a very real question about whether we can bring it under control. What mechanisms do we have for the states to be more responsible? And what mechanisms can we give the world, our investors, both domestic and international, what confidence can we give them that we are on the path to straightening it out, given the tremendous spending needs that we obviously have?
Now, there's a lot more to that conversation, so do check out the website, bloombergquint.com. For now, let's turn to Agam Vakil, who's joining us with the trade setup for the day in India and also what's happening in the futures and options space. Morning, Agam. Well, seemingly not the best cues from overseas, but the US market is also playing catch-up.
Yeah.
There's a bit of uncertainty in the morning in Asian trade, so what are you picking up for India?
Right, Alex, I'm going to start with the SGX Nifty as usual and take a look at how well things are panning out. Actually, it's been quite flat, marginally in the red, if I can call it that, with a decline of 1 point. But if you were to take a look at how our markets fared yesterday, there was some weakness coming through, snapping a 5-day gaining streak, and the broader markets actually did see declines coming through as well. The Nifty banking indices also came off to a certain extent. Coming down to your American depository receipts, we had severe weakness. Vedanta, Tata Motors, HDFC Bank all declining in trade. And we have some marginal gains for Dr. Reddy's and Wipro. But let's talk about your foreign institutional flows again. A very uneventful day for institutions. Something that has been a continuation of a trend. And moving on to your contributors, we have Kotak Mahindra Bank, Sun Pharma, and Wipro. And on the losing end, we have HDFC Twins, M&M, and Maruti Suzuki bearing down on the index. Come down to your futures and options space, and we see unwinding in the Nifty. The Bank Nifty futures are also seeing some amount of traction, unwinding coming through there as well. And moving on to your open interest distribution, the range hasn't really changed. It's a 300-point range right now based on maximum open interest between 10,700 and the 11,000 on the upside. In terms of changes in open interest, what we're seeing is unwinding coming through in the 10,900 and the 10,800 puts. And very little to speak for otherwise. Adani Power and Jet Airways remain in ban. Reliance Capital is a new entrant in the ban. If we can have that one up as well. And of course, India VIX has come off to around, still around the mark of 18. And the Nifty put call ratio is at 1.53, and the Nifty banking put call ratio is at 1.13. And coming down to several of your other stocks, we're keeping an eye on Page Industries. Shorts there, shorts for Jubilant Foodworks, Havells India on the other hand, looking at an up move around 5% in Sun, Zinc, and Shree Cement. And in unwinding, a lot of stocks out there as well. Adani Power, KPIT Technologies, and DCB Bank all seeing declines in trade. So another mixed day of trade, another range-bound day of trade, Alex. you continue to track the Nifty.
Thanks so much for that, Agam. Well, let's look at what's making headlines across the globe. Stephen Engel of Bloomberg News brings you all the first word headlines.
Theresa May is being warned of increasing disquiet in her Conservative Party. Members are worried that her government is sleepwalking towards a hard Brexit. Tuesday's cabinet meeting heard a call for Tory rebels to be threatened with no Brexit at all. That's while other ministers said a no-deal outcome should stay on the table. Brussels, meanwhile, said Theresa May should simply say what she wants.
We continue to follow very closely the ongoing parliamentary debate in the UK. We urge the United Kingdom to clarify its intentions as soon as possible. And at this stage, we have nothing new to say from Brussels because there is nothing new from London.
Well, there are signs of a solution to the shutdown in Washington, with Senate leaders agreeing to allow votes on rival ways of reopening the government. Lawmakers will vote Thursday on a Democratic plan that would fund agencies until February 8th, and also on President Trump's proposal that includes funding for his border wall. The Democratic plan has already been approved in the House. Well, Japan and Russia say settling a long-running territorial dispute in the northern Pacific is a daunting challenge and admit little progress has been made. The Soviet Union seized the 4 southernmost Kuril Islands during the final days of World War II. Japan claims territorial rights to the islands, which it calls the Northern Territories, and the dispute has prevented the signing of a peace treaty.
I'd like to stress that delicate work is ahead to create conditions for reaching a mutually acceptable solution. Our task is to provide a long-term and broad development of Russian-Japanese relations on a quality level.
It's not easy to solve a problem left unsolved for more than 70 years after the war ended, but we must do that. We need to work actively together in order to achieve more trust between the citizens of Russia and Japan.
Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Stephen Engel. This is Bloomberg.
My belief is that, I'm a little bit, you could say, biased because we still have some interest in the Essar steel. But the point is that it will be very difficult for any judicial system or any banking government system to say or to overlook 12,000 crore rupees of public money which is coming into the public, and you say no because you have not followed the process properly, or you do not qualify because of Section 12A or 29A or whatever. So therefore it will be very difficult to say that 12,000 crore is not a big deal, and the highest bidder is ArcelorMittal and should be given. So we have to see. I don't have an answer.
Mr. Jindal, for a man who has always given me straight answers, you've evaded this one beautifully.
No, I'm not evading it.
Just tell me whether you, in your personal belief, having been a bidder in many of these situations, and potentially being a bidder in many more future situations, do you believe the promoter, if the promoter is willing to come to the table now, finally, after the process is almost over, with a chance to settle, if his or her offer is higher than the winning bidders, he or she should be given a chance? Should be given. So you're effectively saying that Ruia should get a chance.
Should get it. Absolutely. It is their company.
Doesn't matter that
if they are paying 100% of the money, so why not?
They had a chance to do it all this time. They didn't.
The process is not over till it's over. It's not over yet. So, and the promoters are saying that I'm willing to pay every dime, then why not? What's wrong? What's wrong in that? If they are paying everything, if they are not, they've done nothing wrong. I mean, the what's it called? The audit, they have not been found guilty of doing anything.
In a forensic audit, kind of fraudulent behavior.
Correct. So then what's the harm?
Well, on the earnings, if you see, Bharti Infratel will be reporting its numbers today. Now, the third quarter of financial year 2019 is expected to be a weak quarter for Bharti Infratel due to cancellation of tenancies owing to consolidation seen in the mobile operator space. Now, if you see the headline numbers for Bharti Infratel, the revenue is expected to fall by nearly 3% to close to 3,541 crore rupees, while the EBITDA is expected to decline by nearly 10% to close to 1,361 crore rupees. Now, this will be the fifth consecutive decline that the company will see in its EBITDA and the drop of 10% could be the biggest one for Bharti Infratel since its listing. Now, EBITDA margins are expected to come in at 38.4%, which will be the lowest in the last 23 quarters. Lastly, the net profit that is expected to be down by nearly 8% to close to 554 crore rupees in the third quarter of financial year 2019. Now, the key number, that is the tenancy ratio, that is expected to come in at around 1.95 times. Now, this will be the first time in the last 19 quarters where the tenancy ratio would fall below 2 times for Bharti Infratel, which will be on the back of the Vodafone Idea merger. Now, as the merger completed, they cancelled more than 27,000 tenancies with Infratel, and this will be the first quarter which will see the full impact of this cancellations, because the last quarter had seen an impact of only 1 month. Now, some of this impact will be offset by higher rentals and higher energy spreads, and seasonally energy spreads are higher in Q3, so that will aid Infratel in the third quarter. Now, analysts are expecting the third quarter to be the last quarter which will see the full impact of consolidation, so any management commentary regarding the same will be keenly watched out for post the earnings. Along with that, any update on its merger with Industar's, commentary on tenancy addition and the impact of the additional 22,000 tenancies cancelled by Vodafone Idea will be important things to watch out for from Bharti Infratel third quarter earnings today.
Well, it could be another steady quarter for ITC, considering 11.3% growth in its top line. We're expecting margins to remain steady at around 40.2% against 40%. Profits could rise as much as 1.3%. Now, the reason behind this drop in perhaps a subdued growth in profits is because of a one-off in the base quarter, where they did see an exceptional income of around 413 odd crores in form of Tamil Nadu entry tax, which was written back with the order going in favor of the company. Now, cigarette volumes are seen at around 4 to 7%. There are no price hikes, so we don't see any change because of the no change in GST rates, and that should aid cigarette volumes going ahead. Investments over the past few quarters should aid your growth in FMCG and volumes profitability. FMCG revenues are likely to rise anywhere between 11 to 16%. Those are the estimates that we are working with right now. Paper business and agribusiness could also see double-digit growth for this particular quarter, but what should really stand out was also its hotel business, considering seasonally it's been a strong quarter for a whole host of the companies in this particular sector. On the whole, we're also keeping an eye on consistency and increasing profitability with respect to FMCG, and keeping an eye on more launches as far as the segment is concerned. On the whole, expecting a pretty steady quarter for ITC.
For Interglobe Aviation, compared to last year, the third quarter is expected to be a muted one due to higher crude prices and a weaker rupee. However, compared to last quarter, this is expected to be a good quarter for Indigo. Now, if you see the headline numbers for Interglobe Aviation, compared to last year, the revenue is expected to be higher by nearly 30% to close to 8,000 crore rupees, while the EBITDA is expected to be down by nearly 27% to close to 1,400 crore rupees. Margins are expected to contract to 17.6%, while the net profit is expected to decline by nearly 83% to close to 130 crore rupees. However, the company is expected to be back in green after reporting its first loss since listing in the last quarter, that is the second quarter of financial year 2019. Now, compared to last year, the earnings will be weak due to lower ticket prices, higher fuel prices and a weaker rupee. Now, fares on an average are expected to be lower by nearly 3% compared to last year to close to 3,826 rupees, while rupee on an average have depreciated by nearly 11% compared to last year. Fuel prices were higher by nearly 31% to close to 73,800 rupees per kiloliter in the third quarter of financial year 2019. Now, along with this, a lower passenger growth and a lower load factor could be a dampener for Indigo in the third quarter of financial year 2019. Now, aggressive capacity addition done by Indigo and higher ticket prices compared to last quarter have lowered the passenger growth, which in turn have resulted into lower load factor in the December ended quarter. Lastly, key things to watch out for from Indigo's earning would include management commentary on passenger growth and yields induction and issues related to the new aircraft, fuel price outlook, and any update on the plans related to long distance international routes will be important things to watch out for from Indigo's third quarter earnings today.
Well, bunch of news that we're tracking this morning. I'm going to start off with results first. HDFC Standard Life Insurance Company, mixed set of numbers reported by the company. If you look at the top line growth or the net premium income that these companies have, that's inched up by as much as 27%. Net profitability of the company has registered a growth of more than 18%, and AUMs also have registered a growth of 13%. New business premium is up by 41%, but then the key issue here is that the company has been witnessing a decline in the value of a new business margin. That's mainly on account of lumpiness in expenses which have been witnessed in the quarter on account of tie-up of two new accounts. ICICI Prudential Life Insurance, not good set of numbers reported by the company. Premium income up by 27%, but then the profitability has taken a hit, down by 34%. AUM of the company 9-monthly basis is up by 8.4%, but then the value of the new business margin for 9-month period, that's contracted by 50 basis points, mainly on account of the revision in actual expenses. Oberoi Realty, it's missed the estimate, but then the numbers too itself on the face of it are not good. Revenue up by 48%, the net profitability is down by 14%. This is mainly on account of the operational expenses or the operational performance, which has taken a hit, down by 2.3% year-on-year basis. In terms of news, we're looking at Reliance Industry, which received CCI nod for acquisition of stake in Den Networks and Hathway. Apart from that, we're looking at IRB Infra Developers, which has received an appointed date for its HAM project to the tune of around 2,043 crore. And we might just want to look at Godavari Power and Ispat, where the scheme of amalgamation with Jagdamba Power and Alloys, there the shareholders have rejected, saying that the share price of Godavari has fallen substantially from the price at the time the deal was fixed. Bulk deals, Nalanda has been on selling spree. We've been looking Nalanda's selling stake in Page Industries, 1.66% stake sold out there. Prabha Dairy, you have Alkuti Sikav, that's the fund which is sold in more than a 1.5% stake in the company. And also we're looking at Keval Kiran Clothing, where SBI has acquired in a stake of more than 2.5%, of close to 2.5% in this counter. And again, on the sell side, we have Nalanda, which is sold in more than 2.4% stake in the counter.
Now, do remember that you'll find all of that on the website bloombergquint.com. You'll find a lot more over the course of the day. In fact, what course that these stocks are likely to take, you'll find that on the live coverage of the markets over the course of the day. Not to mention, there's a lot of coverage coming in from Davos, so do check that out. For now, here are a couple of other stories that you'll find. The government will approach the Reserve Bank of India seeking a special dispensation for deferring provisions that banks need to make for some IL&FS group companies, according to an official. And individuals who have carried out high-value transactions but have not filed their income tax returns for the assessment year 2018-19 will get 21 days to submit their responses. That's according to the Central Board of Direct Taxes, who said this yesterday. This time, that's the 21 days, begins from the date of receiving an email or SMS from the IT department regarding non-filing of tax returns. Well, that's all you need to know going into trade today. For all the updates over the course of the day, do stay tuned to Bloomberg Quint. Thanks so much for watching.